The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. As we continue our conversations from the 2025 NAFB Convention in Kansas City, Missouri, let's talk about this cattle market and what is ahead of us here as we move into 2026 in the beef industry. Joining us for a conversation, Senior Beef Analyst with Rabobank, Lance Zimmerman is with us. And Lance, it's good to see you again, sir. How are you?
Yeah, good to see you too, Jesse. We're doing great. I mean, man, this has to be some of the nicest weather we've had in Kansas City in a while.
I would say so. Really, it's a nice fall for folks and able to get harvest done and more. And I know we're coming up on calving season and more. Yes. So we hope that the good weather continues because, I think about this, and maybe this is a good spot for us to start. We know the cow herd is small.
Mm-hmm.
This could be a fairly consequential calving season for the industry as a whole coming up here, can it?
Yeah, and right now, obviously, tighter supplies and that discussion is in the media and nonstop, whether we want it to be or not.
Yeah.
The reality is the cow herd is small. It peaked in 2019. It's been declining annually up until 2025. I expect the 26 number to be marginally higher, but not statistically significant in terms of that growth. Beef supplies, ironically, through all of that time have been relatively steady. Beef supplies have been between 58 and 59 pounds for the last 6 years, including this year. And so when we talk about everything that's going on right now, the cow-calf producer, we're really hoping he or she would lean harder into heifer retention here during this fall weaning run that we're in. We've tiptoed into some heifer retention this fall, not near to the degree I really would have hoped to have seen, but I really thought the most aggressive heifer retention would come on this upcoming calf crop that you alluded to. The cow herd's pretty much steady to maybe marginally higher as we look to the beginning of this 2026 period. And those heifers that calve as we go through that late winter, spring period, those are probably the bulk of the first run of heifers that we'll start building the cow herd from.
Well, and you mentioned it that the demand and the supply side has been all in the media, of course. Yes. And that's the other piece of this here. We've obviously seen the immense volatility with the comments from President Trump and the talk of, importing beef from Argentina and maybe even Brazil gets thrown in there. And just, I've had this conversation with a lot of folks here recently about, they're trying to do the same thing they did with egg prices, essentially. They want to lower the cost of beef for consumers. Okay, easier said than done when it comes to beef, but obviously it's had unintended consequences on the markets. Prices have come down, all these different things. So your perspective on this and tying in the thought of heifer retention, has this break in prices, could this be what spurs on more heifer retention?
Yeah. One of the things that worries me is we've had some of these breaks before. We've had a lot of history together, Jesse. I think back to fall of 2023, we went through a break of similar magnitude.
Yes.
You look at that April live cattle contract in 2024, it broke 17% in 60 days. We're sitting there with the futures market, I think, for April at 214 or so today. Every day it seems so volatile. You kind of question yourself as you say something. And I think the highs were right around 250. So we're staring a very similar percentage break in the face right now. Again, about 70% of our cow-calf operations calve in the first half of the year, wean in the second half of the year. Mm-hmm. So a lot of this volatility is hitting them right in the mouth, right as they're getting ready to market that fall wean calf crop. And that always concerns me. But I think what's important for that audience to realize is, again, all of this price rally that we've experienced really since the pandemic lows, but especially over the course of the last 2 years, has come on the back of record demand, near record demand. I should say it's the highest since 1983. So for all intents and purposes, the highest demand we've ever seen in our lifetimes, not to date you, Jesse. Mm-hmm. But, as we look at this, that's, I think, the challenge in a lot of the messages coming out of Washington, D.C. They want to talk about tight supplies. No, it's a smaller cow herd. The fundamentals of supply and demand are that supply is relatively steady. It's demand that's doing this. So if that's the case, the consumer's already telling us they don't care about beef prices being high because we're delivering an exceptional product for them today.
Something else I've seen on the news here in the last several days, you got the head of Omaha Steaks saying ground beef's going to $10.
Yes.
I mean, if that were to actually happen, would that finally change the conversation from the consumer side?
It could. I mean, here's what's funny though about that, because I'm a numbers guy, right?
Yeah.
I dug into it and I'm like, where is he coming up with $10? Because today the BLS, Bureau of Labor Statistics price series that we all use for kind of U.S. average ground beef prices, they're essentially around $6.25, $6.50 a pound, that type of range. So $10 from that base is a 54% increase in price. I looked back in the history of the ground beef data that we get from the Bureau of Labor Statistics. The biggest single month year over year price increase was 34%. And that was during the pandemic when meat cases got wiped clean. The second biggest after that was a 24% price increase year over year. That was December of 2003. And so is it possible that prices could go from the mid sixes to $10? It's possible. But is it probable? No. And what's even more funny is I do think that the CEO from Omaha Steaks was probably actually talking his market position like a good cattle producer, because I went to the Omaha Steaks website after that and I realized their price for ground beef on their website before shipping is $8.75 a pound today. So could Omaha Steaks ground beef prices be $10 by this point next year? Yes. Will the U.S. average ground beef price at Costco, Walmart, your local grocery store be $10 a pound? Probably only if you're buying ultra high end, super high quality ground beef.
No, that's an excellent point, and that's kind of the thing I thought too as well. It is holiday season. Maybe we're talking up, some sales here potentially.
Yeah, no doubt.
Lance Zimmerman with Rabobank joining us as we're talking cattle markets and more. And, the other thing that I always think about when we see these big swings in volatility in futures, the cash market's a different animal. And we've seen kind of that divergence again where cash has still stayed relatively strong with all the volatility in futures. And that's another aspect of this market as a whole that we got to pay attention to.
It is. The great thing is, as we went through this massive rally, cattle feeders recognized these are lifetime profits staring us in the face. And so really it peaked about May of this year. We saw about 70% of cattle on feed by our models estimates price protected, either through futures, options, LRP or LGM through the government price insurance programs.
Yep.
So the good news is through this break, 70 to 75% of cattle on feed through that May through current day period were under some form of price protection. The challenge is, as you mentioned, then what do you do as you navigate this? What are the signals? And I would tell you, as producers hedged, especially if they just flat out sold futures, the margin calls were really stressing them out.
Yes.
It was really cutting into cash liquidity for those businesses, working capital, lots of discussions around that. This break allowed them a little bit of breathing room from that perspective. It also allows them to finally buy some competitive break evens, somewhere in that 210 to 225 kind of area is the range of break evens I'm seeing across the countryside from our clients. And so when you do that and you stare these future prices in the face, then you factor in the stronger cash market, especially if you're selling in the South right now. It presents some opportunity, and that's good. It's certainly something that we need, and it's going to be supportive to this market going forward. And that's the thing that I think everybody needs to keep in mind. The fundamentals around this chaos and uncertainty and noise are still phenomenal. And so don't allow yourself to alter your business practices based on the noise. Be a student of your markets, be a student of your industry, and make informed decisions. And if you do that, you're going to be fine.
That's an excellent point. I'd almost say I'll wrap it there, but I want to ask you for final thoughts, just to reiterate to folks, and to go with that. I mean, just managing risk in general. And we talk about it so much, and I know it's tough with the volatility. And you mentioned, the things like the margin calls and more, but what would you leave folks with today? What would you reiterate to them as we're looking ahead to 2026?
I think one of the things that I'm realizing more and more as we've gone through this rally, particularly this year, as we priced so much good news into the cattle market, is I realized the scars, the nightmares, and the challenges of that break we went through in 2015 still ring very large in cattle country. And I get it. But I'd encourage producers to do their homework. and realize how many things are different in this market today than 2015. One thing is true. We have tighter supplies coming, just like we did in 15 as herd rebuilding was picking up. Also, we have exceptional demand, just like we did in 15. But after that, the comparisons start fading away. We started walking into massive amounts of pork and poultry back then. That's really what undermined our market. We actually started walking into more cattle in the second half of 15, not the first half of 15. And that led to that 100 consecutive weeks of market declines in a lot of areas of the country. Today, we haven't even started herd rebuilding. We've kind of dipped our toe in that water, but we haven't leaned into it. That's still coming. And so just from a supply standpoint, this market's going to be exceptional. 2026, 2027, and probably into 2028. And so don't allow the chaos of the moment to rule over the optimism that should be there for the future. We still have some risks, trade risks, perhaps, recession risks, perhaps, but those things, we can't predict those, nor can we predict what comes out on a social media post from the, folks in DC these days.
Nope.
But we can control what we do on our home operations. And there's a lot of things to be excited about in the beef industry today.
Good thoughts and perspective as always. And I guess for the time being, we won't run out and buy our $10 ground beef or anything like that.
But hey, Thanksgiving's around the corner, so maybe that prime rib versus that turkey is a good buy.
That's very true. Very true. Senior beef analyst, Rabobank, Lance Zimmerman. Good to catch up with you here in Kansas City for NAFB, and we'll talk to you again real soon. Appreciate it.
Sounds great, Jesse. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.